The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and welcome to the European crossover webinar. We've seen continued sell-off here in the SPOOs, and obviously the catalyst is what's happening in the boom market. And yesterday, we went over that in regards to the Reuters article that kind of laid out what might have been, how initially we started to get that first phase of the sell-off or continued sell-off in the boom market. And obviously it's been quite volatile. Hang on one second. So we're going to move over real quickly. I mean, obviously we were with the. Hold on.
According to the Polish Labour Ministry.
I mean, at this point now, that's why we were covering that, yesterday before the move really got its speed going. And obviously, we were up here, still near these highs in the euro dollar. Obviously, that has a lot to do with the unwind. I think it's a little bit overdone, but that being said, the continued move has kind of been capped to a certain extent, despite the what was earlier the bigger fall. And I was seeing here that that's the biggest fall with German bonds in over 25 years. So let's go on and get into the SPOOs. Hang on one moment. Be just a second. And Sean says, good morning. Good morning, Sean. Let's go on and get onto the SPOOs real quickly. So, well, as I said, we've had pretty big sell-off. Michael says aloha from aloha. Good morning from Hawaii. Hello, Michael. And so, once again, let me jump in here with the SPOOs. We had talked about this early on in the week. I mean, and I'm talking about the market kind of starting to run out of gas. And you remember here we were trading in this. I think it was right at 4.5, and we talked about, hey, look, I think it was at 6 at the time, and it backed down. We had support at 4, it backed down to like 4.25, and we're looking for a bounce up. But hey, probably better get the hell out of Dodge. As we moved from 11.75 to 14.75, and even though it was the start of the new week, put new money to work, start of the new month. One of the things that I had leaned on a reference was, how China was, kind of got whacked, during the overnight at the time. And taking a look to see how we're doing here on the old Shanghai. Hang on. And I still think this is going to be causing issues also. We'll continue to drift lower here in the Shanghai. Look here. I'm going to back this up a little bit. Be just a moment. And I think we could probably get something next week. Potentially, it might be an issue, and we'll switch over there real quick, and then we'll come back into the SPOOs, because what's done has already been done. I mean, it's a shame if some of y'all weren't prepared. Oh, here's the Shanghai on a daily, and we've gone over this several times. We've got these gaps here. And I think we're going to go and fill out this gap. Now, I was talking to this one trader, pretty sizable trader last night, and I think next week we could really get we could really see a shakedown sometime next week, maybe as early as Tuesday. Just a further drop. Not only Shanghai, but I'm talking about the SPOOs overall. I was talking to another pretty big bond trader. He was telling me that the 5-year was just barely hanging on by a thread. And we already saw that stuff got whacked overnight, but he said a good, decent NFP, and man, they could really take it. I think on a bigger overall perspective, it's just that there's a lot of, people are going to have to lock in a lot of rates. And so it's probably exacerbating, really. I mean, it's a boom that got things going, but it's really, you've got some other things that are going to be feeding on rates overall, and why this move could keep on going and going and going. And which obviously is bleeding over into equities. And I think all these new traders, that's just probably only going to just exacerbate it. I wouldn't be surprised if on a Sunday evening, we, coming into Monday, they really take them down here, kind of hard, which just exacerbates the sell-off that we've been seeing in the SPOOs. I don't think it's going to be, the wheels are going to come off the caboose in the SPOOs, but we'll probably see a nice little pullback. And while at the beginning of the week, I was pointing towards that in the, with those China stocks, they had finished off their lows, but they'd taken a whacking. And the idea, and that's not the catalyst which started everything, but I'm just saying it just adds to the negativity. But they were looking at, a lot of brokerage firms were starting to tighten up the rules because of all these new traders that come in. And so that really took the Chinese stocks for a whack, and it's starting to push more pressure here on the Hang Seng. But I mean, I think what could happen is, if now that there's such a big emphasis on rates, is that if right now everybody's going to view the cup as half empty. Everybody's going to accentuate the bad news. If you've been in this business for any length of time, you know how stuff, that's just the way stuff works. You know what I mean? And so even if the report comes out good, decently good, any little bit of wage growth, they're probably going to jump on it like a hungry dog, on a steak. And they're going to grab on anything they can and accentuate the negative on that. And that's just the way that's probably going to happen. And so I wouldn't be surprised to see the SPOOs pop up a little bit on a good NFP, and then turn around and race to new lows going into Friday. And then Monday, who knows what's going to happen there. I'm just saying, it doesn't mean that, you have that as your game plan, but I think you have to be aware that that's potentially going to be how it would happen. And so on a good, decent NFP report, if you see any wage inflation, you probably want to just go and step in and take the other side of the SPOOs and look for them to head lower going into a Friday close. And then probably Monday and Tuesday, see that move continuing to work lower. Doesn't guarantee that'll happen, but that's the way that I would be looking at it at that point. Let's take a look at something real quick. We can take a look here. Rising yields help the euro hit a 10-week high versus a struggling dollar. So, like I said, we just want to get the feel on what's going on overall. It says euro hit a 10-week peak on Thursday, tracking European bond yields and benefiting from a sell-off in the dollar after a week's U.S. jobs data added to speculation that the Federal Reserve will delay raising interest rates. And we referred to that yesterday with the ADP. And as Britons took to the ballot to cast their votes in the most uncertain UK parliamentary election in decades, euro also hit a 3-month high against the sterling. Though the pound inched down against the dollar, it remained in the range which it traded for the past week. The greenback has skidded almost 5% in the last month on a run of softer than expected data that has driven investors to push back the bets on when the Fed would start hiking rates, with some not expecting the rates until next year. Figures on Wednesday showed U.S. private sector employers in April hired the fewest workers in over a year, raising a red flag for closely watched non-farm payrolls number due on Friday. That data, as well as a warning from Fed Chair Janet Yellen about the potential dangers of high equity valuations, helped drive the euro to its highest against the greenback since late February, trading up 0.3% at 13.82. The dollar lost momentum after the ADP report yesterday, so some of the euro move reflects that, said Phyllis Papavidid, senior FX strategy analyst at BNP Paribas in London. The next 48 hours are going to be quite important, both in terms of the election and the payroll number tomorrow. Traders said the euro's resilience was also due to a surge in German bond yields, which have jumped nearly 50 basis points in just over a week, outstripping a 34 basis point rise in their U.S. peers. Against the British pound, the single currency's power to 74.71 pence, and its highest since February 6th. The ruling Conservatives and opposition Labour Party have been neck and neck in opinion polls that indicate neither will win an outright majority in the 650-seat parliament. Let's see. Sterling overnight implied volatility spikes. We can go, let's see, overnight cost of protection against big swings in sterling's exchange rate jumped on Thursday, with investors bracing for renewed uncertainty as the Britons head to the vote in the most unpredictable general election in decades. Overnight sterling dollar implied volatility option, which expires on Friday when the results are due, rose to 33%. The 1 week implied volatility traded at 18.75%, near its highest since the aftermath of 2010's parliamentary elections. The 2010 vote gave no party an overall majority and led to several days of wrangling between the parties to form a coalition. Let's see. So let's go and get back here to SPOOs. So when you come down here to this trend line, and yesterday I was saying, I tweeted out I thought it was a good place to go in and cover. And they did bounce back up here into the 2075s, but not before they got down as low as 2061. Now at 66, I had a level here, and also the trend line. And it did defend that trend line. And I was thinking it was so oversold that we could, bounce from there, which we did, but not before we dipped down to 61. Overall, what we're probably looking for, let's take a look here. I mean, really, I would just be going with levels at this point as opposed to a specific fib. I think for that, you're going to have to look way down here to get a better feel of where things would go to or where some support would be. Let's see. And that was also 63, 64 was its 38%. 50 to 20, 46. And 46.75 has been pretty huge overall. I think they'll probably make it down to this 2029 eventually. The 61% of this move. We'll go on and mark that off real quick just to have that available to us. So hang on. And 2046 is going to be the 50%. So let's mark that off. But here we are into this zone. We've talked about this zone before from way back. This 06, you can see the importance of this zone. 06, 2006 to 2070. So at this point here, the big levels are what's going to key. Also, this 58.50 that's been huge overall, and obviously we've bounced off somewhat off of that. 58.50 has been really big as a reactionary point of recent, and was obviously was a good place to go and step in and cover as we made that move lower. I wouldn't expect us to come back down here yet. This is probably it. And we can see here the 10-year yields, 10-year notes really got whacked. We'll go into that real quick. Hold on. I mean, they just beat this thing like a drum. Let's bring this up here. Move this one over here, make it a little bit closer. They got past this zone, and they just kept on going. Finally found some support down here at 26.15. This old level, if we were to go back all the way back here, you can see here where that 26.15 is coming out. But this whole move, what's going on in SPOOs and the dollar also, is all about what's been happening. What's been happening here with interest rates, and it's carried over obviously from the boom. Let me just go on and move this over here. Let's see. And you know, when you get into these kind of markets where they sell off, man, you have to be careful. I mean, you know, I talked about that yesterday. There was that guy. He was going to stand in the way of everybody selling the boons. He was buying the boons. Because you know why? Because it's here. Because he had the ECB at his back. So he was going to buy the boons. He had all this logic. Yeah, good luck there, buddy. Hope your account's not totally emptied out by now. Let's see, hang on. I didn't even participate in that discussion. I was just looking at that discussion and I was basically just smirking. Yeah, you got the ECB at your backside. Oh, okay. Good luck to you, buddy. He has all the logic why the boons would not continue selling off. That was 2 afternoons ago. I think that, you know, I don't know if that guy's still in business at this point. It's just crazy. No offense, but you can always tell a beginner. I have no perspective. You know, someone was asking me yesterday, I was selling the euro up there. I did pretty good in the euro yesterday. It was a long day for me. Oh my goodness, it was a long day. I was up, doggone it. You know, I was up for over, eventually before I went to bed, I was up nearly 19 hours, I think it was. You know, I had a good day yesterday in the euro. You know, did a lot of action in the European session, early European session, and then I came in mid-New York session, I was selling them. And, you know, I got short the euro. There was a lot of people shaking in their boots. And, you know, anything can happen, really. And I thought it was overdone. It still is overdone, and we're still up pretty strong. But I thought it was overdone. But it goes back to the same thing. You know, you have to, we talked about that yesterday. You can't come into these markets with blinders on. You know, they're gonna hand your head right to you if you do. I mean, you have to understand that thing is anything can happen. If you go in with that perspective, like I said before, it's good to have confidence. It really is, but it can't be to the point where you know totally ignore what potentially can go and happen, because markets get carried away with themselves, and people get carried away, and they don't see. They don't care. Once selling begets selling. That's essentially it. And then people just want to just get out. Just get me out. Just get me out. I don't care what the price is. Get me out. And so, I mean, people can make a case as why we're moving lower in the boons, obviously in the notes too, and bonds. What I'm saying is, when you get something like this that's getting carried away with itself, you got to be careful standing in the way of something like this. And that boon move was really huge. It's so huge, it's like a big tidal wave. And you're going to stand in front of it. And that's what this guy was saying with all of his logic. Oh, he has the ECB at his back. F the ECB. Now he got his clock cleaned. I don't even know if he even got out. So now this guy stood in front of the boons, trying to pick up the boons, in what's been the biggest fall, biggest move in the boon in over 25 years. Biggest move in the boons in over 25 years. But this guy was going to stand in front of the boons because he had the ECB at his back. It's quite pitiful, really. But anyway, so we're here. You know, obviously, like I said, I mean, the notes have just been whacked. I mean, just whacked. And my whole thing is, you know, the thing is, and I was saying I was gonna start focusing on the 10-year, and we got short, and I did a little bit of trades in here. Let me see. Well, you got to take it in perspective. Hold on a moment. Sorry about that. I had to go and clear my throat. Actually, I'm over my cold. I just have some junk in my throat. But anyway, Sean says, since you tweeted that the euro was so overdone by 900 pips rally, I started hammering the short since 3 a.m. this morning. Well, that's good. I mean, obviously we're lower here, but you got to be careful. Although I think that we'll go and move in this real quick just to address that. Considering, you know, we rallied up in here and made some nice money, you know, not a whole lot, but made some decent money. You're scalping. Considering where the boons have moved overnight, and they're coming back, and how far the notes fell, and the moves that we've seen in the euro, then this move up here hasn't been very much in the overall bigger perspective. Like I said, when you see how much this euro dollar has rallied and handed people their heads, and in light of where the boon went to and the notes, and that we only basically added on another 15 pips or so, then yeah, I'm just saying be a little bit careful. I was given perspective. You know, I did go in to say that, and that's why I was selling the euro up there. I was like, hey, man, we've already rallied 900 pips in very short order. But that gives me my perspective, and that goes back to the same thing. It's a good thing to have confidence, but you don't want to have confidence to the point that you have blinders on. I was merely offering perspective up here why I was selling the euro. I started selling it at 27, then I sold some more at 39, I think, and then 50. And my last short was at 63. Then I got out around 50, and then sold some more again in the 60s, and dipped in the 40s, got out. And like I said, this has been going on for so many days. I'll be honest with you, some of these numbers I even forget. Or I go, is that the same way I traded it when it was down here, 100 pips lower? But finally, I was able to get out of everything. And my last trade, I got out at I think it was 13.20 right in here. I know I wanted to get out around 13.19, but I was like, oh no. And when it was on that last chunk of the move, I had a couple of opportunities to get out when it was in the 20s from a position I had on from where I was short at, I think it was another one when I was short at 35. I was really kicking myself because it kept dipping and then it would pop back up. And I covered that other one at 35 or 34. Covered that one, I think at 22. And then the last one I had, I covered it. I think it hit 19 and I covered, but I didn't even check. I probably got filled at 20 or whatever, but that's where the last of it, and then I didn't do any more. I did see it pop back up, and I thought about selling it again. I was so worn out. Like I told you, I was up for 19 hours. So it was a good day overall, but but anyway, once again, yeah, but keep it in perspective, Sean. I mean, don't go overboard. Here's the deal. I think that as the boons kind of come on, they come back, and you can see the notes coming back. We probably will see a jerk down here as the dollar gains some steam, and they take off these $0. But just take what you can go on and get. I mean, it's good. I mean, if you're saying, I don't care, I'm holding it for the long, 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 long haul, and I have a stop above the highs, and I don't give a rat's, you know what, well, then go on and do that. I mean, I'm just saying is, when I mentioned that it's rallied 900 pips, that is true. That was giving me my conviction to sell them yesterday and stay short, even when it was going up to 69. That being said, don't just, I mean, every day is a new day. So, although once again, I would say this is that it hasn't added on to the gains very well in light of the huge mammoth moves we've seen in the Boone and subsequently even the 10-year note. This is pretty good support here. This 26.24 to 26.27 and 26.26 was a 78% of this move from 25.29 to 30, and it just went right through it and kept on going. So it's probably overdone here. So right now, maybe we'll see a pullback here in the dollar. And once again, I'd say the risk would be, to be short the dollar going into NFP. But it's going to be wild and wacky. But if, like I said, I just wouldn't get too greedy. I think we will see a yank down. But, like I said, at this point, I don't anticipate doing anything until, tomorrow after NFP, to be quite frank. I wish I would have been trading this notes. This was really something else. But I hadn't been I don't mind it away because I hadn't been following notes for a very long time. And like I told you, some people say, I just trade the charts. I like to have a feel of what's going on. This way I'm not selling the bottom here and getting it put right back in my face. But it's been a good move overall. And, maybe we're finally going to start seeing some volatility in rates. And if that's the case, then there'll be good money to be made, going forward. But, we're definitely coming off these lows here. Been a hell of a sell-off. I mean, a hell of a sell-off. So let's go back in here into the SPOOs. And how far they can go in and come back. Let's move this out over here. Also, you got some support in here, which is 26.30. Let's go and do this. And you have to keep track of these 10-year notes because it's going to give you an idea of what's going on potentially with the SPOOs. So it's important here. And we've got some more resistance here at 27.05. So hold on. Tell you what, man, some good money was made in these notes. Doggone. I mean, some doggone good money. Hang on a moment. I didn't get an opportunity to play with the Euro. Obviously, Sean did when it went up there. I was tired. Like I said, it was a long, 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 long day. Yesterday at close to 19 hours, and I was just whipped. I needed to sleep. That's all I knew is I needed to sleep. So, but we got 26.30 in front of us. Obviously, you got this little range in here, so probably going to start to struggle and have some trouble in here. But once again, I'm going to play it. I was going to say play it low, but forget that. I'm not even going to be doing any trading whatsoever. I don't anticipate doing any trading whatsoever today. It's been a pretty decent week, and I'm going to keep my powder dry until after NFP tomorrow. And I'm just going to wait till stuff shakes out. So that's it. Wait just a moment.